Give us your outlook when it comes to the China recovery. Right at the start of the year, there was a lot of optimism coming out of COVID zero. That demand has obviously not resurfaced. What has resurfaced is the resurgence of the property crisis there. Are there now kind of structural concerns when it comes to at least a near or medium-term price for the likes of iron ore and copper?
Yeah, well, I'd say a couple of things about on the China front. One is, we're a long-term company, so we're thinking in the 20 to 30-year time frame. So we kind of have that lens on it, if you will. But if I look at the way we look at China right now, I'm actually feel very positive about where it will be going. I think it has been bumpy, but I think we need to remember that they've, in effect, come out of COVID a year after us, right? There was the big pivot at the end of November. I've been there a couple of times this year. I was just there last week. And it very much looks like it did, in New York and London, a year before it is now, if you will. So there's the COVID kind of coming out period. But there are also, challenges, as you mentioned. There is a big real estate issue. They've got, 27% of the GDP in real estate, which is a massive number. That's obviously shifting. And this relates to another change, which I think is underway in China, which is to shift to a kind of a new economic equilibrium. They talk about moving from, a high growth to high quality growth. And I think they want to see more focus on the consumer, services, that type of thing. But those are not easy to make happen. But if you look at fundamentals, and that's why I said more to the medium and long term, we feel very strongly about it. You look at, there's a continued urbanization. China is still much less urbanized than the United States or certainly Japan, and that we think will continue. The consumer, is a key factor. It's consumption is 39% of GDP. That's about 70% in the U.S. The question is, you can't force consumers to buy. They're going to buy when they're confident, and they're saving a lot. They're, again, coming out of COVID. There's uncertainty. But I think that there are enough of the fundamentals to feel good about the prospects as they move forward. And I think you're going to see also a more relaxed view about what the growth is. There isn't, when I lived in China before, there was kind of, you hit the exact numbers on the exact date that you're going to do it. I think there's a sense here. They've put out, they want 5%. I think there's going to be a range, and I think they can't have it fall too far below that range, or there will be challenges. But net, I feel positive. I just think we just need to recognize some of the more fundamental shifts that are going on, and that there are, right, I think, still some long-term structural drivers.
In the short term, though, without a strong recovery out of China, is an earnings recession inevitable, at least temporarily? And does that mean, companies like yours are going to need to look at other aspects of value creation, like M&A?
Yeah. Well, I think, again, as we look at our portfolio, we think, again, iron ore and steel is actually quite critical in sustainability. There's 300 tons of steel in a 3-megawatt windmill. So with the energy transition going on in China, that's one of the drivers. There's literally hundreds of billions of dollars being spent on that. There's going to be the need for those resources. But as you alluded to, we are wanting to push more on the copper front. We'd like to have more of that in our portfolio. We have set an aspiration of sort of doubling what we have in copper by 2030. That's why Oyu Tolgoi is a very important part of it. And I think, M&A is definitely it's a lever and an option out there. I think it's also the mine building and mine development that we need to look at. We are so short of copper as humans, it's not funny. I mean, I don't want to bore you with one little anecdote, but, since we've been around as humans, we've mined or discovered and mined 700 million tons of copper. That's like over the last 100,000 years. If you think about us meeting the net zero targets that we have for 2050 and having reasonable growth in global GDP, 3 to 3.5%, we're going to need to find another 700 million tons of copper. That's just a massive gap. So buying other companies isn't going to sort that that huge mismatch. And we see it in other areas too, lithium, nickel, and so forth,
well,
cobalt.
Dominic, you're anticipating...
So we're exploring.
We're anticipating a question, because I wanted to ask you if you're still looking for lithium assets, and if so, if you have any particular targets that you could share with us.
Yeah, we don't have a target, but clearly lithium, battery materials is important for us, because again, we're focused on, we want to help provide the materials for the energy transition. So that's right square down the target, if you will, on that. So we're looking, we have Rincon in Argentina. We will continue to look for that, for opportunities there as well. There's a lot going on the technology front in material science, which we're also looking at, things like lithium recycling. We're going to have to figure out how to recycle all these batteries which will come to the end of their life. How do we do that? How are we able to draw lithium out of that? So there's a whole range of initiatives underway, which we and others are involved in on that front to try and goose up, if you will, our lithium profile.